If you are interested in dividend investing, you are likely always on the hunt to find new high-yielding stocks and ETFs. And while high-yielding stocks and ETFs can be attractive to investors that are seeking income from the assets, there are several potential downsides to consider. Most of the time, these higher-yielding stocks and ETFs have generally more risk involved. And even though some of these stocks and ETFs could be paying out a lot to you, the massive share price decay makes it not really worth the investment. In this video, we are going to talk about Simplify Volatility Premium ETF, known as SVOL. Now, this is a newer ETF that was launched sometime in 2021, and a lot of dividend investors have a lot of questions about it. Is this a good investment? And is the almost 18% trailing 12-month dividend yield legit? The Simplify Volatility Premium ETF is an exchange-traded fund launched and managed by Simplify Asset Management, Inc. It invests in public equity and fixed income markets in the U.S. For its equity position, the fund invests directly and through derivatives in stocks of companies operating across diversified sectors, which sounds pretty legit so far. It employs short strategy and uses derivatives such as futures and options to create its portfolio. It invests in growth and value stocks of companies across diversified market capitalization. For its fixed income portion, the fund invests in high-quality, short-term debt securities. The Simplify Volatility ETF was formed on May 12th of 2021, so it has not been around all that much. Some more facts about the fund: the expense ratio is around 0.66%, and the fund's AUM is only around 166 million, which is absolutely nothing compared to funds like SCHD or JEPI, for example. More importantly, let's look at the fund's dividend yields, and let's look at how the fund performed over the past year or so. So like we said earlier in the video, the fund's trailing 12-month dividend yield is legitimately 17.77%, and the last announced dividend was 32 cents per share. This is for a $21 stock. Normally, you would never see a 32-cent per month paid dividend on this cheap of a stock. But are the dividends consistent, and has this fund decayed in price like crazy? Well, according to the dividend history, and keep in mind there's not all that much history because this is a relatively new stock, the dividend history looks pretty good. We're seeing a lot of months paid out around the 30, 32, 35 cent range, which is actually pretty consistent considering a fund with this high of a yield normally doesn't have all that much consistency. But the fund doesn't only have good things to offer. The fund's share price has decayed a decent amount over the past year or two. And again, this could partially be because of just overall market conditions. I mean, look at the QQQ or the S&P 500 after all. But the fund is down around 14% as far as price goes, if you look at the share price over the last few years. Maybe most importantly, this might be the most important metric: how is the fund done as far as total return goes? This is dividends included. Over the last year, the S&P 500 total return is down 5.86% in the red, while SVOL is up 7.41% in the green. But if you look at price return, it's a different story. The S&P 500 has lost 7.43% over the last year, and SVOL has lost around 10% in the last year. So very much like what we're seeing with a lot of these higher yielding funds. If you look at price return versus total return, it's a very different story because these funds generally do not return much as far as price return. But if you include the dividend in the equation, they are returning a decent amount. So all in all, would I personally add SVOL to my portfolio? I honestly am thinking about it. Maybe I'll add a small amount of it just to get that nice juicy dividend and hope for some price appreciation or an even sideways moving share price. I would be more than happy with a 15 to 17% return on my money, obviously. But this is one of those funds where you might want to be careful getting too deep into. It's a relatively newer fund. The assets under management are not all that beefy yet, but it's definitely an ETF to keep your eye on and to watch. If you want to see more videos like this, make sure to please drop a like in the video and subscribe for more. Thanks again, and I'll see you in the next one.